Hi there, POA champion. Welcome to today's video. If you want to gain as much marks as possible on your CSEC POA exams, you're in the right place. All right, because you need to be able to answer the 7 questions we're going to discuss today. Now, if you're new to this channel and you don't know who I am, I'm yours truly, Makeda, an accountant, founder of the Accounting Academy, and POA tutor who has a distinction in POA. And I'm on a mission to transform as many grades and lives as possible. And I started by transforming my own grades and my own life. When I signed up for POA the first time, I failed miserably. However, by the next sitting, which is approximately 5 months later, I was able to get the distinction that I now have. All right, so too many students are saying POA is a struggle, POA is so challenging. I want to stop the struggle with POA, and I want to help students prepare to pass POA the smart way. Okay, I'm also on a mission to help as many future accountants and entrepreneurs understand the language of business, which is accounting. Now, this is not about me. It's not a talk shop about me. So let's jump to the 7 questions. But before, let me know where you're viewing this video from. Represent in the chat, drop the name of the country you're viewing from, or drop your flag. So on the screen, I have a question that was inspired by May-June 2016, number 25. So this was inspired by actual past paper question. So this was modeled after that question, all right? And it says, an increase in drawings will result in what? How will an increase in drawings affect your balance sheet, basically? That's what they want to know. Will it involve an increase in long-term liability? Will it cause a decrease in capital? Or will it cause a decrease in current liability? Or will it increase your capital? Well, let's see, right? I want to show you some figures to help you see the effects of an increase in drawing. So let's look at scenario 1 behind the pink block. We have some figures here. We have our opening capital, we have profits, we have our drawings, which is highlighted in yellow, and we have our closing capital. This is the vertical formula, or this is the capital section of your balance sheet. All right, so let's look at scenario 2. In scenario 2, we kept the opening capital and the profit the same, but our drawings increased by $500. And if you compare the two figures in red, we have $2,500 as our closing capital for scenario 1, and we have $2,000 as our closing capital for scenario 2. And we could clearly see that when the drawings increased by $500, our closing capital decreased by $500. So it proves the point that when we increase drawings, our capital will decrease. So this is something you can learn off, but I want you to understand how drawings affect your capital. All right? If you're okay with that, drop a 1 in the chat for me. If you understood what I just shared there, drop a 1 in the chat. Let's look at another model question, which is inspired by May-June 2017, number 25. Feel free to drop any questions that you have as well in the chat. I would come back to answer those, right? So drop them in the comments. This one says the working capital of a business is $17,500. The total amount of current assets are $19,500. What is the total amount of current liabilities? And we have a couple options here. So what do we do? How do we find the total amount of the current liabilities? Well, we can use our working capital formula. All right, so write that down. Working capital is equal to current assets minus current liabilities. Put in the figures that you have. They gave us $17,500 and $19,500. So put that under the respective word and put X for the unknown, which is the current liability. So we have $17,500 as our working capital. We have 19,500 as our current assets, and we have X as the current liability. Now, you want to get the unknown by itself. And I'm taking my time on going through this because I know a lot of persons are not maths savvy, right? That's one of the reasons a lot of people think that they cannot pass POA, but you just need basic maths. So let's get the X by itself. And we're going to move the X across to the left-hand side. We're going to end up with 17,500. Add X is equal to 19,500. We want to get the X by itself. So we have to move the 17,500, all right? Let's do that. We would end up with X on the left-hand side by itself, and then we're going to have 19,500 minus 17,500 on the right-hand side. And once you work that down, you're going to get your answer, which says X is equal to 2,000. So your total amount of current liabilities is 2,000. Okay, so write down the main formula, put in the information that you have, and then find the unknown. Again, if you're good with this, drop a 1 in the chat. Don't forget to like this video. Feel free to share this video as well. And of course, feel free to subscribe so that you don't miss when I put out any videos. Okay? Because if this is good and you're dropping those ones, share it with somebody so that they can be blessed. Number 3, model question inspired by May, June 2016, number 4. It says, under which heading would you place land and building on a balance sheet? Would you place it under fixed assets? Would you place it under current assets, under current liabilities, or under long-term liabilities, which is also known as non-current liabilities? Where would you place it? That was a good idea to pause the video, write down your answer, and then look at the explanation, all right? So you're not just consuming, you're also creating and learning. Land and building is something a company owns, all right? And this is normal under the CSEC syllabus. So when you see land and building, this is something that a company owns. Therefore, it is an asset and should be placed under assets. But which one of the assets? Are you going to put it under fixed asset, which is non-current assets, or are you going to put it under current assets? Well, it depends, right? Does it meet the criteria to go under fixed assets? Is it going to be kept for more than 1 year? Right? So the items that go under fixed assets are normally kept for more than 1 year, and these items do not change value often. Whereas your current liabilities, your current assets, they are kept for less than 1 year, and these items do change very often, right? So they change in value, they change in physical being as well, right? Because let's say if you look at an inventory, the inventory is going to keep changing and moving. You will not have the same t-shirt for the whole year. Well, you shouldn't if you have a good running business. And anyway, these are the criteria. And land and building is normally going to be kept for more than 1 year, and the value of this item is not going to change within the year. It's not going to change often. So it should be placed under fixed assets. Anytime you have an asset or you have a liability to place in your balance sheet, measure it up to the criteria and see where does it fit, so you know where to put it on your balance sheet. All right? Understood? You guys know the drill. Drop a 1 in the chat. So let's move on to number 4. And number 4 says, which group of assets below is recorded in the order of liquidity? And this was inspired by May, June 2016, number 5. So if you can, please make sure and check out the original question. Is it option A? Is it option B? Is it option C or D? Write down your answer and let me go ahead and explain. Well, firstly, order of liquidity. What is order of liquidity? This is where assets are placed in order depending on how quickly they can be turned to cash. So they are placed in order depending on how quickly they can be turned to cash. This is the opposite of the order of permanence, and that's another topic for another video. Cash is already in the required format. Cash is already cash. So this is the most liquid asset and should be placed first whenever you have it in your list, right? And whenever you are putting things in the order of liquidity. So we have a hack here. The answer will be the one that has cash first, since we're dealing with order of liquidity. So spend time analyzing the options that has cash first. Don't waste time working on point B or option D because they don't have cash first. And if we are putting items in order of liquidity, you're going to need to put cash first. So let's see. Option A has cash, plant and machinery, and stock. Plant and machinery is more permanent than stock. Stock can be turned to cash easier than if you have to sell your plant and your machinery. So this is not in the correct order. Point C begins with cash. So we're going to look at that one. It has cash, stock, and then building and land. Cash is most liquid. Stock is going to be easier to turn into cash than the building and the land. So this point, option C, is in the correct order of liquidity. Remember, cash is already in the format that we want. So when you have to put something in order of liquidity, look for the option that begins with cash and analyze that. You don't want to waste time in the exam going through options that is clearly wrong. Number 5. When current liabilities are deducted from current assets, the result is called what? And this is modeled after May, June 2017, number 20. What do you call the result you get when you deduct current liability from current assets? This is a really nice question. It's very interesting. It's an interesting way of testing students' knowledge, and I love it because it's not the regular format. So it did challenge a couple of students, right? What do we get when we deduct current assets from current liabilities? If you know your formulas, you will know that this is the formula for working capital, which we looked at in number 2. All right, so you could rewind and look at number 2 again. So this answer will be C, because when you take your current liabilities and you deduct it from your current assets, you will get your working capital balance. So write this formula down in your formula book. Make sure you learn it because it's going to come in very handy, and you can test this formula in a number of ways. Current assets minus current liabilities is going to give you your working capital. Number 6. So we're moving along nicely. This was inspired by May, June 2017, number 4. And it says a balance sheet serves the purpose of what? You definitely don't want to get this wrong. You want to make sure you understand what purpose does a balance sheet serve. Is it to calculate profit and losses that are made? No, it's not. Is it to show the value of closing stock in hand? The balance sheet will show the value of the closing stock in hand, but that is not the purpose of the balance sheet. Actually, it is option C, which is to show the value of assets, liabilities, and capital. It's not to determine the available cash available. So again, your answer for number 6 is C. Please make sure you understand the purpose of this. All right. And number 7, really interesting question again. A woman started her business with a capital of 30,000 in the bank. If 20,000 of it was used to purchase building and plant, the balance of 10,000 will be what? Is it going to be total assets, drawings, working capital, or current liability? Well, let's see what we have behind here. Let's break it down. So they had $30,000 cash. They used 20,000 cash, right? That's in the bank. They used that 20,000. And they had 10,000 cash remaining in the bank. So they have cash remaining in the bank. This money that is owned by the business is an asset. This 10,000 that is in your bank is an asset. It is a current asset if you want to be more specific. All right. So this knowledge is going to help you eliminate some of the options and make it easier for you to select the correct options. So it's a current asset. Therefore, it's definitely not your total assets, right? Your total assets is going to be the plant and building that they purchase plus whatever cash remain. That is your total assets. It's an asset, so it cannot be drawings. It's possibly working capital. Let's come back to that one. And it's definitely not current liability if it's a current asset, all right? So if A, B, and D are out of the picture completely, then it leaves us with C. It leaves us with working capital, which is the correct answer. I want to go in a little bit deeper and show you why working capital is the correct answer. So if they remain with $10,000 cash, right? This is a current asset, and we know the working capital formula says current assets minus current liabilities is going to give you your working capital. If we have no current liabilities, we're going to end up with 10,000 current assets minus 0 current liability is going to leave us with 10,000 as our working capital or our net current asset. All right. So that 10,000 is indeed our working capital or net current asset, as I just showed you. All right. So interesting. Let me know if you understand. One of the things I like to do with multiple choice questions, and I do like doing multiple choice questions, is using the elimination method. So if we know that that 10,000 is an asset and is a current asset, we could just go down and eliminate some of the options, but you want to make sure you understand why working capital is selected. All right. So congratulations, you did it. You made it to the end of the video. It was my pleasure to share this information to help you transform the grade that you would get if you did exams today to the grade that you want. All right, a reminder, preparation is key. Let me also remind you to like this video so that YouTube is going to push it to more persons and more persons can be blessed. Comment. Let me know how this video was for you. Did it help you at all? Drop any questions you have, any comments or the chat. And do not forget to subscribe so that you would get notification when I post part 2, which should be posted next Sunday. Look out for new videos every Sunday at 5 p.m. for the next couple of weeks. And of course, share, and bless others the same way I took the time to share this information and to bless you. Thank you.